Welcome back. All eyes are on the Fed. So everybody, investors around the world, everyone is waiting to see what the Fed is going to do tomorrow. Are they going to come out strong and aggressive with policy moving forward, or are they going to come out more dovish in response to the recent market activity and sell-off that we've seen in markets? The markets have been sending a message to the Fed that they better not come out too strong. Although the last couple of days, yesterday we had a huge rebound. Today, the Dow had a huge rebound. It was down as much as 800 points at one point. The NASDAQ finished down 2%. So tech stocks are still in correction, bear market territory, whereas the S&P and the Dow are still in correction territory, heading to bear market territory. So what does that mean for Bitcoin and cryptocurrencies? As we've talked about, Bitcoin, this is the hourly chart of Bitcoin right now. Bitcoin and cryptocurrencies are risk assets. So Fed policy is going to be huge. And what you can really expect is if the Fed comes out more dovish and more accommodative in response to the recent action, a lot of analysts think they will. Some analysts think they won't, but if they are more accommodative and going to continue less aggressive measures moving forward than what they initially talked about, then you could see a nice rebound in stocks, and you could see a really nice rebound in cryptos as well, including Bitcoin in the altcoin market. If they come out really strong and they do more, they're more aggressive than what everybody is expecting, then we're going to see some more continued downside, more continued selling. So irregardless of what the Fed does, they do have to act to get inflation under control. So they're going to have to be somewhat aggressive in terms of what they've said they're going to do with a quarter-point rate hike, reducing asset purchases and unwinding the balance sheet. The question is, how much of that are they going to do at the same time and when? And that's going to tell us to what degree of aggressiveness that they're willing to go to. So markets are going to react accordingly. And until we get that response from the Fed and their decisions, we're not going to know what to think. But at the end of the day, regardless of the reaction, whether it's immediately down or immediately up, we're going to continue to see some de-risking as we move forward, because the accommodative policies of the Fed and the liquidity that's been free flowing into the market will be limited throughout the rest of the year, unless we get a real serious market situation in another crisis, whether it's economic, whether it's war, conflict, another pandemic issue. So depending on what we see there, and events like that popping up will determine whether or not the Fed is going to reverse course. So if the markets do react and they start to sell off and we get a serious economic event, the Fed will reverse course just like they did in 2018. And they're going to have to, turn around and start being a little bit more accommodative. So we'll have to see. But if they just kind of stay the course and they come in, they bring the markets in for a soft landing, then we're going to continue to see some more downside in the markets. In terms of Bitcoin and cryptos, we're not, we're just going to have to wait and see what the real effects are. But right now, we're still hovering around that base that I was talking about. And I've been talking about that $36,000 range. We bottomed at 35,000 the other day. And like I said, we were going to bounce around here until we get a decision from the Fed. Once we get that decision, what I had originally projected was that we're going to bounce around here potentially until about, February 14th before we see a continuation to the upside, a bounce into that retracement, and before we see any further downside on Bitcoin, and to find that ultimate bottom, where I don't believe that we're going to see below 30,000. I know a lot of people are calling for market structure to break here and to go below 30,000, but if the Fed is not too aggressive tomorrow, I don't know that we will, I just don't know that we'll break that. There seems to be a lot of appetite, a lot of buyers at that $30,000 level, a lot of support. So it's going to take a whole lot of selling and some serious concern out there to break that $30,000 level. We might wick down. And again, wicks are not really important. It's your closing. So it's your higher time frames. You want to be looking, when I talk about bottoms, tops, reversals, things like that, you really want to be looking at daily. You want to be looking at the weekly, and then ultimately the monthly, to really understand price action and market structure and where we're going and what kind of a market we're really in. And you can see This is an uptrending channel that a lot of people have been looking at. I had Gareth Soloway on the other day. He identified this channel on Bitcoin that we've been trading in, and it is an upward trading channel where you can just zigzag in here. This is your bottom market structure. This is your peak. And you're going to see this all over Twitter and YouTube, and it's all over Twitter and YouTube after Gareth came out with this the other day on my channel here. So the higher time frames are what are the most important to be looking at in terms of price action, bottoms, reversals, things like that, and trends. And you can see when we came off the bottom here in July, we kind of hovered around here for a couple of weeks before we did another, had another little bit of a move here. And, you know, these price patterns do repeat themselves. You know, Bitcoin is a newer asset, and you'll see different price patterns throughout, you know, Bitcoin when you go back in the history. So one of the things we want to look at is, you know, what is your worst case scenario when you're looking at risk reward? And like I said, I think for me, it seems like Bitcoin has set, you know, that base of 30,000. But let's say all bets are off, Fed comes out strong, we have war in Ukraine, we get another, you know, pandemic and health scare. What could be the worst case scenario downside? Well, what we've seen when you go and zoom out into Bitcoin, you've seen these lows, recent history lows in that $3,500 to $3,800 range. So that seemed to be the worst of it. And if we're at those levels, then you're seeing some serious action in the stock markets as well. But we're at a point now where Bitcoin and crypto aren't going to single-handedly necessarily have a serious event on their own without other markets being affected as well. It all revolves together. The capital is flowing throughout the markets together. The same investors that are driving this price action here are the same investors driving the price action on Wall Street. When you look at this run up that we've had since March 2020 all the way into right now, you see the same kind of price action in the Dow and the S&P. Here's the Dow right here. You can see it's just been straight up, and we rolled over just like Bitcoin. NASDAQ pretty much straight up. This is your March low here. And then of course the S&P straight up as well. And everything's been kind of on a straight trajectory since really the 2008, 2009, you know, great financial crisis, when quantitative easing was instituted and the markets started getting pumped up with all that liquidity that is chasing yield and looking for return. And that's really what's going on. There's a lot of competition for yield out there with liquidity. And that's why these markets are so overheated right now. And that's why we've seen such a big run up. And that's why you're seeing what's happening now with this deleveraging and unwinding of balance sheets around the world. Investors are taking profits, they're taking risk off, and they are reducing exposure until we get clear guidance from the Fed. And like I said, once we get some guidance from the Fed and we know where we're headed, we're going to continue to see a little bit more deleveraging, a little bit more profit taking moving forward. But right now, I think the worst case scenario locally is that 30,000 level. If we break that, then it could go down and test some lower levels. But it just seems like back here in July, I thought for sure everything looked like we were definitely going to break 30,000 and maybe revisit the previous all-time highs of 19, 20,000 and test that, which would be major market structure again below this level. But it didn't happen. There was a ton of buying pressure that drove prices up, and I think we will potentially see that again. Worst case scenario, if it breaks that, we could go back to test those $19,000, $20,000 levels, previous market highs, and if that breaks, then you're down. But the good news is that Bitcoin's been around long enough. There's enough institutional involvement with it. The network is strong enough and secure enough. It's not going away. It can drop, and it's dropped 80% in the past. We've seen 80% drawdowns, and that puts Bitcoin in the $14,000, $15,000 range. If it drew from all-time high down 80%, you're around 13,000, 14,000, somewhere around there. 14,000, high 13s, and it just doesn't seem like that right now is on the table unless we have a serious economic event and the Fed has to intervene, which they will before markets globally completely melt down. They're not going to let that happen. They will jump in just like they did last time. Some people don't think they will. Some people think they might let it go on. So this is what I'm looking at today. We'll get back into the hourly. You see we had this big drop and then recovery. This is the same time the markets recovered and rebounded from that 1,100 point deficit yesterday. Bitcoin came back and rose about 10%, I think, from the bottom yesterday to this point here. That was about a 12% increase, and it's kind of held that level, and it's going to hold that level till tomorrow. So we will have to see how markets react tomorrow. Watch the stock markets, watch the Fed in terms of what they're going to do and their guidance moving forward. Everything hinges on the Fed right now. All eyes are on the Fed. And unfortunately, that's just the way it is right now. I know, a lot of people didn't think crypto markets were tied so much to the stock markets and to the Fed policies, but it's a risk asset. Right now, they're all risk assets. There are some good use cases. But irregardless of what we think or we want to think, it just is what it is. These are all risk assets right now. And it's liquidity looking for yield. And right now the trade is risk off until we see what the Fed's going to do. And we'll be moving forward from there. So I will see you on the next video. Until then, have a great evening, afternoon, morning, wherever you are in the world.